Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, July 24th, 2014. You're looking at a chart of the SPY. Not much happened today, folks. It was kind of another dull day. The market tried to grind a little bit higher, tried to melt up a little bit, but really didn't go anywhere. But need to be aware of a couple of things. So let's talk about the S&P or the SPY right here, and the same story applies. See this this down day here from the 17th of July. That number, that low here, which is at 195.43, that's still your line in the sand. Until the market closes below that level, we're in an uptrend. We're above the moving averages, and we're in an uptrend. So I still say, and I've been saying this for several days now, I still feel like the market, the S&P is going to get over 2,000. It just wants to get there. We've read this book before. I've seen this before. It feels like it. And that's kind of the stance I'm taking. I wouldn't be surprised to see something resemble at least an attempt at that tomorrow, meaning Friday, specifically in the morning. We'll see. There was a lot of earnings tonight. Amazon dumped out. There was a couple of good ones, couple of bad ones. So we'll see how it plays out. I'm not exactly sure, but a lot can happen overnight, and we'll see what happens. But usually, unless something happens in the world or that impacts the market, intraday on Friday, usually you're going to have a quiet day. You're going to have a float up and light volume, and you go into the weekend to a positive note, and that's usually the way it goes. But of course, those are probabilities, and anything can happen. I don't know what the market's going to do tomorrow. I'm just telling you what I'm seeing, which is I see that the market wants to go higher, and that's the stance I'm taking. And hopefully everybody listened, and that the short play isn't on until we break this low or that trend line that covers these four lows here, or at least these three lows. So until that happens, no game on the downside. So we'll just play it by ear. We got to be patient. The cycle, maybe it's not going to work out this time. Maybe the cycle's going to invert and we're going to go higher, and then we're going to look to go lower in a month or so. We'll see what happens. But as it stands now, this is where we are. So you have to respect the market. Again, always the same thing. Let the market tell you what to do. Don't impose your will on the market. It's very, very important. All right, that's enough because nothing happened in the major market today, the major indexes. We're just going to leave it at that and move on to a couple other things. Let's look at gold for a second, because gold is kind of playing out to plan, right? Here's we have another continued down moving gold. We hit a low today of 123.90 in the GLD, and let's look at the weekly chart, because I've been saying that I would love to wait to pick up gold in that 120. Actually, it's better look on the daily chart. Love to pick up gold down in this area here, 122 and a half, 123, in that neighborhood. If we can fill this gap right here, that would be ideal. So that's what I'm looking for, and so far it's playing out according to plan. So let's be patient with gold. We're getting close, and this would be an easy pickup right here, because if we came into this gap fill right here at 122, let's just call it 122.70 for argument's sake. If we came in here, I'm pretty confident that I'll find a stop, a good mathematical level down here, most likely this area here, or maybe even this double bottom, and we can play a stop right here and then let gold run. I think it's going to run for maybe 2 to 4 months. So that's what I'm looking for. I'm looking for a prolonged up move in gold, and that's why I'm harping on this one. I'm just not ready to buy it yet. I just love to get the best price I can get, and I'm trying to get that price for you guys. So be patient. We'll pick up gold when the time is right. Let's look at one more thing tonight, which is interest rates, because we finally had a move in interest rates, and here's the 10-year interest rate. And on a daily basis, we had a nice up move today, and right here where if we put in another low here, which would be a higher low yet from this point down here, maybe we get back up to this 275, maybe even 275, maybe even Well, no, we're not going to get up to, we're going to get, maybe 265 is probably the number right here. On the 30-year, I was looking for 3%, which is up in, on the 30-year, I'm actually looking for like 3.5% up in this area here. Pardon me, I got confused with the charts, my fault. So we're looking at 3.5% on the 30-year. We're looking at about 265 to 270 on the 10-year. And that's, hopefully we'll take a ride up. And as you guys know, I'm still in the TBT trade, and the TBT is inverse the interest rate markets, basically shorting the bond market. So higher interest rates, lower bond prices. TBT is the 20 to 30-year bond prices. So as the prices go down, TBT goes up. As yields go up, TBT goes up with the yield. So that's how that one's played. So, we'll see what happens. Normally, and what we've been seeing over the last several days, even a couple of weeks, is we've been seeing lower yields, and we've been assuming that lower yields are going to mean lower stock prices, and that still could very well be. That's normally the case. However, if we have higher yields can choke the market just the same, right? Higher yields mean higher borrowing costs for companies, for people, for the government. So everything off of higher yields gets more expensive. Therefore, that could choke the market as well. That could choke earnings. When corporations have to pay more to borrow money, it's a direct impact on earnings or a direct impact on their bottom line. So when that happens, we can certainly look at higher yields as a negative to the stock market. Now, you'll hear, the banks are going to do better with higher yields and all that stuff. That's fine. That's all nonsense. It's going to do what it's going to do, and the market's going to do what it's going to do. But I'm just trying to give you a sense for what the story might be. And if the story becomes higher yields bad for the market, it becomes a self-fulfilling prophecy. So that's where that stands. Anything else I want to talk about tonight? I think maybe just the VIX. I'm taking a look at the VIX, and even on a flat day, we had the VIX up a little bit today, which is somewhat of a tell, but I'm not going to read anything into it because it wasn't up all that much. The VIX was up 32 cents. It's at 1184, and your low is down here at 1029, or what was this low here? Your low here was 1028, and we're still hovering around the lows. We had this huge spike up. Now we're retracing. And just for kicks, let's see how much of that we retraced. I haven't done this yet. I'm going to do it right in front of you live. Fib retrace. All right, so let's see. Well, wrong one. Remove. Let's go from the low. Sorry, guys. I got to redo it. Here we go. Okay. There we go. And now we've surpassed 61.8, 0.618, and we're probably into close to about a 3/4 or 75% retracement. There's nothing to read into there. It's just going to happen when it happens. So basically, you have to be patient with the market, and the VIX, as long as it stays above this low, it's still, maybe higher prices ahead. We have a higher low. If this becomes another higher low, then we might take off to the upside. But without any significant volume in the market, nothing's really going to happen. And today was another light volume day in the S&P or the SPY. It was only about 55, 56 million shares, which is a very light volume day. It's lightest day of the week. So with no volume, you get that float mentality. It's very quiet, ignoring all the bad news, and that's the mode we're in. It'll turn when it's ready to turn. Got to exercise patience. In the meantime, we have some trades on. We have some longs. We have some shorts. We're positioned very, very well because we have a lot of powder dry, and when we get the signal, we take the signal and go from there. That's it for today. I'm David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis. Thanks for tuning in, folks.